Hello, I'm Ernest Mast, President and CEO of Doré Copper Mining Corp. Doré Copper is based in Canada, and we have a project in Quebec that we're looking to restart in a hub and spoke arrangement.
Ernest, thanks for coming on the show. First time we might have spoken with regards to this story. Let's start with you. What's your background? What's your story? What have you done that's relevant to what you're doing now?
I'm a metallurgical engineer by training. I started my career with Noranda Inc., and then worked through the subsequent companies of Falconbridge or Noranda Falconbridge and then Xstrata. I was with that company for 20 years, working in Quebec, Canada, Chile, and the Dominican Republic. Afterwards, I moved to Panama, where I was the president and CEO of Minera Panama. And after that, I returned back to Canada, worked for a couple of gold and copper companies, prior to joining Doré Copper in 2017 as one of the founders, and I've been in that role since then.
And you obviously got the big blue chip backgrounds, etc. So are there sort of transferable skills? Or is it a very different type of experience for you down at the junior space?
It is different. Some of the skills are definitely transferable, such as obviously the technical skills, dealing with people, dealing with governments. However, the one skill or the one reality of the junior mining space is that you don't have that financial support that you have when you're working for a bigger company, and therefore you have to be a lot more creative and entrepreneurial.
So, okay, and I want to kind of get into this because I think in a market like this, there's a lot of things you need to do to, as I say, you're going to be in the game to play the game. And I think a lot of juniors are under a lot of pressure in terms of either be cash constrained or projects taking a little bit longer than they should. Yourself sitting at 12 million market cap, despite having a PEA, despite being in Quebec, etc. There's a slight disconnect going on. So how do you feel about all of the above?
Well, that's certainly a challenge, and one has to plan and look forward to the future. So we're doing a few things that are key in terms of preserving the story and making sure the company is well positioned to move forward. We've reduced a lot of our expenditures. The drilling programs that we are doing are a lot smaller. We've obviously had some reduction in our workforce personnel. And one interesting thing that we're doing is because we're at an old site and we're going to reconfigure the site, we've actually done some recycling of copper, and we'll be recovering about 20,000 pounds worth of copper from the site from obsolete cables and whatnot.
Okay, so you're minding the pennies, as we say here in the UK. You're big cautious with how you allocate that capital. Can you, just in terms of setting the scene for me, so obviously read all your material, but what have you got now over and above the PEA? You've got some sort of brownfield side, a bit of infrastructure, etc. But how do you value that on your balance sheet? And how should we value that as shareholders?
So one of the things to look at that we have is what is the value of the infrastructure that we have. So we have a mill with a capacity of approximately 2,700 tons per day. We have a brownfield tailings facility. To replace those two assets, I think would probably have a replacement cost of well over $100 million. So that's just one way of showing that the value in the company is intrinsically more than what the market cap of the company is. The other value that we have is infrastructure in terms of connectivity to the Quebec hydroelectric grid. Over the last year or two, we've established a connection or the reconnection to the Quebec grid by retrofitting a 3 megawatt transformer. The other value that we have is we've got full access to all of our sites. So it's not a remote greenfield type of scenario where you're going to be spending hundreds of millions of dollars just to get there. So all that value is in place. And the third key element is in terms of value, the human value. We've got a good team in place with a lot of experience. And also when the time comes to ramp up again, we're close to the town of Chibougamau. It's a mining town of 7,500 people. And we should be able to attract good mining talent to work for us because those folks can be at home every night.
Okay, so you've got those three things going for you. Let me deal with the first one first. In terms of that infrastructure replacement cost, that's one thing. I guess, are you being marked down because there's a cost to refurbish and get that going again? I mean, what can you tell us? Because off the back of the PEA, what can you tell us about that on the cost side?
Yeah, it's correct. In the PEA, we established the cost for restarting the mill facility and also doing a transition from a traditional kind of slurry tailings disposal to a dry stack. And the cost of doing that in the PEA was about $50 million. That included $17 million for the filtration system for the dry stack, just something we think we can really improve upon. The second one is some retrofitting in the mill. That was about $24 million. And that mainly includes purchasing a brand new ball mill, putting it in an existing space in the mill. And therefore, we could be run in the future much more efficiently from an energy process control and personnel standpoint than was ever done in the past. And the third element in that $50 million was a new crushing and ore sorting circuit at the Corner Bay site. And we saw the great benefits of ore sorting to our project and included it in our project.
Right. Okay. So you've and the PEA 10.5 year life of mine and a reasonably low AISC. Somewhere it was like 225-ish level. Is solid even at today's copper prices. And 50 million doesn't sound like a massive kind of sound like capex. You've got to go through the phases and obviously de-risk the heck out of this thing. You said you're kind of preserving cash at the moment because there's no point in putting out good news because it's not getting valued at the moment. So in terms of time, which is another kind of, quite frankly, a cost element, how does a company like yours go from where you are today to where you need to be able to have a conversation around cost? Is that just a waiting game?
In some ways, yes, it is a waiting game. However, what we are doing is we're currently doing certain smaller parts of the feasibility study that advance at a relatively low cost. So one of the things that we did was an extensive flotation metallurgy program on the Corner Bay deposit, where we took a composite sample and we sent the sample for ore sorting, and then we sent the pre-concentrate from that ore sorting sample for metallurgical testing to really confirm what the metallurgical performance is. And based on that, at a later date, we can do the detailed design of the mill. I'm happy to report that the results from that metallurgical test work were much better than actually we had in the PEA. So that's going to be a bit of economic bump for us when we issue the next study. Another thing that we're doing is we have submitted an ESIA to the Quebec authorities. They've responded with a project directive, and we're looking at that and looking to answer looking to prepare the document internally and not using consultants to do the preparation of the document. In many cases, when you use consultants to prepare your documents, they just end up asking you the questions, you answer them, write it down, and then they paraphrase it and charge you for that. So that's a step. That's another way that we're saving money.
Right. Okay. And so when was that PEA done? So I didn't ask.
The PEA was completed in May 2022.
It's a cost environment which has been quite high, and obviously driven up by COVID delays and interest rates, etc. But so it shouldn't be too out of whack from where you need to be. What are the things that are going to help you? Because coming back to that question about how do you move from where you are to where you need to be? Copper price is around $3.80 at the moment, so it's not too bad. $4 plus would be nice. We've seen what's happened in the gold environment, where the gold price has gone up, but so have costs. So therefore, margins have stayed relatively similar to what they've been over the past few years. So equity's still not getting the credit there. How do I read a copper company scenario in terms of where the value comes from, and what's going to be able to allow you to go and raise capital at cheaper amounts? What's going to allow you to get the attention which you desire?
So in differentiating the copper industry from the gold industry, there's one really big differentiator which has emerged, and that's the critical metal aspect of copper, where copper being a critical metal, there is funding support from different organizations and different groups that it's no longer really available for gold. And we're tapping into that. There's a couple of funds, Canadian-based and also Quebec-based, that we're looking into, and those would definitely be a really great push for us to move ahead the project without having to take on really heavy dilution in order to move forward. The second aspect, which differentiates copper from a lot of the other metals now, is there's really an acute shortage of concentrate production and a glut of smelting capacity. So although we already have an offtake agreement with one of our shareholders, Ocean Partners, to take our copper concentrate, we do know there's people knocking on the doors saying, we'd really like to get some of that Doré copper concentrate because we can't see how we're going to source the concentrates going forward. And part of that is extra smelting capacity being built around the world. But another part is recently the industry has gone through some very difficult times with the closure of the Cobre Panama mine. And also Anglo American recently announced that they're going to be producing going forward over 200,000 tons of copper less than was originally forecasted. So that's like taking two of the largest mines out of commission. Both of those companies had deposits in kind of the Americas. Some of it would go to the Far East, some of it would go to Europe. And those smelters are actually very short feet. Now, part of the metallurgical work that we did produce a composite concentrate, and we took assays of that composite concentrate. And our concentrate is definitely one of the cleanest concentrates in the world. So it's a fabulous material for blending, and it's a great material as a baseline copper feed for any smelter in the world. I actually worked in copper smelters for 7 years in Chile. So I really do know what I'm talking about here. And our concentrate is like prime fillet, when a smelter looks at it. So something could occur on the kind of on the customer side where a customer would really like our material and they need it essentially for their business to be viable. And therefore they would come and look to work with us and Ocean Partners on working out a deal, how to get our concentrate.
Right. So given what you're saying about your asset and the quality of the asset and the grade of the asset, again, strategies have been sort of changing. Canada's always been a kind of drill to the edge of the envelope type country versus the Australian model of get into cash flow quickly. Given where you're at, is it likely that you would be seeking a strategic partner sooner rather than later? He's got that kind of balance sheet credibility and access to kind of ability to kind of free up the potential of what you're describing is quite a good asset, because for you it could become a very hard slog otherwise. I mean, what are the options available to you?
So a couple of options. One is, as I mentioned, look to join with a downstream partner in some way, shape, or form. Another one is groups wanting to get into the copper industry. We're at an incredibly low entry point for any kind of individual or group wanting to get into the copper industry. I think those are the two most likely scenarios. And there's a third scenario too, is that we do have some gold properties in the copper mix. One of them is in the PA. Another one of them is not in the PA, but we've had some very good drill results on the gold side over the last year at the Gwillem property. And it's not, to me, wouldn't be highly unusual to look to have an arrangement with a mid-tier gold company looking for those copper units to decrease their all-in sustaining cost and get some gold production as well. So we have a number of avenues available to us. We've had a number of discussions with different groups, and I believe that could definitely be a catalyst for the company as we move forward.
Okay, so the secret of success is usually timing. So in terms of 2024, what are the things that you hoped to be able to deliver to market, or what are in terms of stuff that you're in control of? or maybe, as you just described, maybe some of the conversations which may bear fruit. Is 2024 a catalyst for you in any way, shape, or form, or is it a case of react to the market and what she tells you?
So there's a couple of catalysts that could occur in 2024. One of them, which I haven't spoken about yet, is exploration success. Our principal project is the Corner Bay project at about 8.6 million tons over 3% copper. Our geology team have some ideas on some potential expansions of that deposit closer to surface. And that's something that we're going to test during 2024. Another deposit that we're going to test at 2024 is the Cedar Bay deposit. It currently has a small, very high-grade resource. It's not part of the PEA due to its size. But again, looking through and studying the geology of the region, we identified an undrilled structure, which is just to the southwest of the Cedar Bay mine. And we're going to be drilling that deposit. So that's, I'd say, one of the main catalysts for us. Another catalyst would potentially be securing the government funding for advancing the project in a way which is not dilutive to the shareholders. There's a couple of programs that we're going to be applying for and have applied for. And those programs would really show support for Canada and Quebec for critical minerals, and definitely put us in the driver's seat in terms of charting a way forward without it being dilutive to our shareholders going forward. And then the third element, which is something we do have some control of, but not total control of, is if we can come to a strategic, come to a deal with a strategic to move things forward. However, I think you need those other two elements in place as well to really help that discussion go forward.
Okay. And in terms of, I just want to finish off, because I want to make sure I totally understand this. You're talking about some super, super high grades across the various parts of the project here. What are the kind of difficulties that you need to overcome in terms of, your experienced engineer and so forth? Water, is that a big problem? The way that the ore body is laid out at the moment, what are the kind of things that you're trying to work out? How do we optimize or drive efficiencies from?
Good question. In that, we're very fortunate in that the two deposits we're going to start with, Corner Bay and Devlin, they both start close to surface. Both of the deposits have very good geometries or configurations for mining. One of the issues we would have is the deposits aren't necessarily that big, so you always have to be mindful of dilution. Now, that's one of the reasons why we have the sorter in the project. It kind of takes care of the dilution at the source. There's plentiful water available in the area, so that's definitely not an issue. The ore quality or the host rock and the mineralization of the deposits is quite clean, so we're not going to have any kind of environmental or waste issues as we look to mine the projects. I would say the biggest issue would be with the Corner Bay deposit, in that it starts from surface and it goes down to about 1,000 meters. The sweet spot of the deposit is about 500 meters. So we do have to in the project, we do have to get underground as quick as possible. And we're looking at mining companies throughout the world to see what type of techniques that they've implemented to maximize their development rate. And that's something that we will apply to our project.
Okay. Because it always comes back to that line that people like to quite casually throw out, like grade is king. I think grade is just one variable, which definitely helps. But there's so many other factors which determine the economics of projects. So there's some tricks to see how you come at it, how you think about it, etc.
Yeah.
Well, Ernest, I appreciate you coming on and sharing that with us. Like I say, it's not a story we've kind of looked at a lot, but the grades are very attractive. It's really a case of how you engineer this and how you develop this going forward. So please stay in touch and let us know how you get on. Okay.
Thank you very much, Matthew. A pleasure to be here with you. It is, and thanks for those really good questions.